Nerida, let's talk about coronavirus and the update. We're already hit hard with tourism, education, retail, shopping, housing.
Yeah, I mean, look, certainly for commercial property, we can see very clearly that the hotel industry is being negatively impacted. Also, education sector, anyone with shopping centres, retail is really getting hit. For residential property, it is harder to come by data, and that's the issue at the moment, that on one hand we can see in share markets that things are very erratic. People are buying and selling very quickly. They're nervous about the market. That volatility shows how skittish people are feeling at the moment. For property, we will get a clearer idea this weekend in Melbourne and Sydney with clearance rates. They were high last weekend. You know, we didn't really see a big impact on those clearance rates last weekend. It is likely that there will be some hit this weekend. We can see on realestate.com.au that search activity does seem to have moderated, that we were seeing quite rapid rises from pretty much May last year, but last week we were starting to see similar search to what we would typically see over a Christmas New Year time period. So it does look like people are watching and waiting and not panic selling or you know, trying to jump in and get bargains, but certainly just monitoring the market.
Yeah, the biggest drops were ACT and Hobart, and I suppose that comes as no great surprise, particularly Hobart, because it's been such a bullish market.
Yeah, and I guess it's a lot to do with speculation too. I mean, we know in markets like Hobart there has been a fair degree of speculation in the market, and people don't like to speculate when things are so uncertain. Of our bigger cities, you know, we have seen Sydney moderate quite a lot too. So Sydney is a market that is very sensitive to change. You know, we know that when interest rate cuts are made or policy changes are made, we do tend to see an acceleration of activity in Sydney. Conversely, is it also the case that now with coronavirus, people are a little bit more nervous in Sydney than what we're seeing in other markets?
I guess this is a hard question to answer at the moment, but a lot of people are talking about what happens if we head towards a recession. What will it look like?
Yeah, I mean, and this is the problem at the moment. There's such a wide degree as to what would happen. I mean, on one hand, the next 2 weeks is highly uncertain. You know, we don't really know what will happen with regards to the spread of the virus. But, you know, ideally within 6 months, it will be hopefully all over and, we can all get back to business. If we do go into recession, it's obviously bad news for all property. You know, we know that one of the worst things for property markets is when people become unemployed and they can't pay mortgages and find it difficult to pay their rent. So, you know, ideally we don't get to a stage where we do see a rapid rise in unemployment. Ideally, a lot of the measures that are being put in place by government, a lot of the stimulus packages that are coming through now will lead to a softer decline than going into recession. Well,
brightening the subject a little bit, what are the first home buyer hotspots at the moment?
Yeah, I guess a little bit off market, but yeah, we have been having a look at first home buyer activity. They have been a pretty bright spot on the market this year, since the 5% deposit scheme came through. We'll probably start to see them moderate as well. I don't think there'll be any group in particular that will be not impacted by concerns about coronavirus. But at the moment, what we have found quite interesting with inquiry levels is very much Sydney, Melbourne focused. Those markets do tend to be the areas that see the most inquiry. Not surprisingly, they are the biggest markets. But what's also surprising is how much activity we're seeing with regards to first home buyers in the apartment market. So, you know, we typically think of the average first home buyer as buying a cheaper home or a house and land package. But what we can see very clearly now is that places like Melbourne CBD, Parramatta, even Randwick in Sydney's east are seeing very, very high levels of inquiry. So there is a very strong shift at the moment to apartments for that buyer group.